So let's talk about the elephant in the room, and that would be Tesla. I'm not even going to talk about this massive head and shoulder pattern. I will talk about how this last leg down, price did form weekly sellers level at $215. And when you scroll down to the daily chart, you have this gap down, which caused that level to form. And currently, you have the makings of a bear flag. And typically, what happens, you'll see the continuation of the move down with the origins starting from the $260 level. Now, before we look at where price potentially can head, let's look at why price is sour. So Tesla was the world's largest EV maker by sales until the fourth quarter of last year when China-based BYD outsold it for the first time. Tesla once had the EV market almost entirely to itself, but now it's grappling with a tsunami of competition from EV startups everywhere around the world. At the same time, demand from consumers appears to be fading. EVs typically come with a premium price tag, and high interest rates are forcing more consumers to opt for cheaper gas-powered vehicles. We recently have seen that potential customers of Rivian have canceled their orders. We've seen Ford have to cut prices on their Mustang EV, and on and on and on. Tesla slashed prices by an average of 25% in 2023 to help spur demand, which dented the company's profitability. Not only did they slash prices by 25%, it was done over 7, 8 different periods last year. Now, Tesla stock is down 21% year to date, and most of that decline happened after it reported its official results for full year 2023. Tesla delivered a record 1.8 million vehicles for the year, but it was an increase of just 30% year over year, which marked the slowest pace of growth since 2020. So what Tesla needs is something that's going to spark the next move higher, multi-year move higher. Tesla didn't offer a deliveries forecast for 2024, but analyst estimates point to 2.2 million vehicles, which would mark a further slowdown in growth to just 22%. Now, we all know that Tesla isn't just a car manufacturer, right? It's a technology company. It continues to develop increased and industry-leading self-driving software, which could transform its business. And it also plans to launch a humanoid robot by 2027 called Optimus. Not to mention, no one's talking about Tesla's energy segment, right? It already has the fast-growing solar energy, and what I'm referring to is the battery storage business in particular. Now, it's unlikely any of the above will send the stock higher near term, but the 21% decline this year and the broader 52% drop from its all-time high could serve as a great entry point for investors willing to hold the stock long term. And I'm in agreement. You want to buy on the dips if you are and have a multi-year time horizon. Now, first stop is going to be this pivot low at 160. Now, what I like personally is this level at roughly the $140 level, and that would be a bear trap, meaning if price does move down, breaches this level, you're going to have the resistance and support traders shorting the stock, only to be met with buyers at this 140 level. Let's look at that zone. So that zone was established for rallying price, 2 basic candles, and the rally higher. This was a level where sellers came in. This is called a flip zone. This is a beautiful zone, which would be the opportunity to back that dump truck if and when price declines. We're talking about another $50. I don't know what's going to happen, but I do know that fundamentals and the technicals say that at the moment Tesla is a short. Thanks for watching. Subscribe, please. Like the video.